I will continue with some real world examples from Apple. By using Apple's financial statements, I will try to answer these questions. Again, a quick reminder, all numbers are in millions. Question 1. What was the original cost of property, plant, and equipment sold or disposed of during 2020? Assume that all purchases during 2020 were made in cash, neither equity nor debt financing. And I am also asking whether this assumption can hold true. So when we talk about original cost, we are actually implying the historical acquisition cost, the value of the asset when the acquisition was made. And this is the gross part of the plant, property, and equipment, not the net amount you will see on any company's balance sheet. However, on Apple's balance sheet, again, we are provided with net book value of PP&E. We cannot use that for this question because it was asking about the original cost, historical acquisition cost of the disposals during 2020. So then I should look into the notes to find the gross value of property, plant, and equipment account. And again, I got this information from note 4 on Apple's financial statements and notes. Here I have a breakdown of property, plant, and equipment account. This is the net amount reported on the balance sheet, and this is the gross amount I should use to answer for this question. Remember, I also talked about the accumulated depreciation and amortization. Actually, to be practical in here, we are assuming that amortization is a little so little number, not material, and so what I see here as accumulated depreciation and amortization is mainly accumulated depreciation, because amortization is a little bit different. Amortization is recognized for intangible assets such as patents, copyrights, trademarks, which Apple has, of course. And because in this specific question, we are only trying to calculate the effect for property, plant, and equipment. Actually, I should have excluded the amortization in here, but looking into the notes, it is not possible. I don't have any information about this, so that's why I assume that amortization on PP&E is a very small number, because generally for PP&E we are recognizing depreciation and accumulated depreciation. Amortization is generally for intangible assets. So this is another important topic in here. So I have now known about the gross value for property, plant, and equipment. So I will be using this. 2019 ending balance will be 2020's beginning balance, and I also have the beginning balance, ending balance for 2020. Now I will construct my T account, PP&E gross. Again, it's an asset account having a debit balance. So again, beginning balance and ending balance are directly taken from note 4. And for purchases, actually, I have made another assumption. For example, actually, it was also written on the question. Assume that all purchases during 2020 were made in cash. If all purchases during 2020 were made in cash, then I should look into the cash flow statement, investing section. And again, from cash flow statement from the investing section, I have this number. However, this is an important reminder. This number includes only the cash investing activities, not non-cash investing activities. For example, the company might have acquired some PP&E through stock issuance or through debt financing. I don't have this number yet. So for the sake of practicality and instructional purposes, I assume that all purchases were made on cash, and then I put this number in here. But when I solve for disposals, I ended up with a negative number on disposals. So this is not possible. So now I see that my assumption does not hold true, because purchases will be higher than this amount, so that beginning balance plus purchases are higher than ending balance. For example, assume purchases are 10 billion, 11 billion. Now this amount will be then the summation of beginning balance and purchases will then be equal to, for example, let's assume that $10 billion of purchases, including cash and non-cash investing acquisitions. This number will be $105 billion and ending balance is 103. So 2 billion of disposals, then I will have a positive number. So that's why this assumption does not hold true. And why this assumption doesn't hold true? Because there's a very high likelihood that there had been some there might have been some additional purchases that were not made in cash. I got this number directly from the cash flow statement investing section, but the equation, the accounting equation, does not hold up. So definitely there are some other non-cash investing activities which would then increase this number so that I will have a positive number for disposals. For example, also I took this from note 1. For example, in 2019 and 2018, there had been some uh, non-cash acquisitions. So that's why this information I got from the cash flow statement investing section does not help me much to answer this question. And that's why this assumption does not hold true. Purchases should be higher than this number so that I would end up with a positive number for disposals. This question is really important. It might seem to be complex compared to other questions, and this is a difficulty of understanding real world problems. This is a difficulty to decode the financial statements of real companies. That's why I am showing you such real world examples.